Gold has no counterparty risk. This is a safe haven trade. We have entered the mother of all safe haven trades. And now I'm going to say something that just about nobody else other than maybe Martin Armstrong is saying, which is the following.
Ladies and gentlemen, welcome to the special interview. Today we have a first-time guest to the show, Tom Luongo. Tom runs the Gold, Goats, and Guns newsletter. You can sign up through that via Patreon. The website is tomluongo.me. Links will be in the description below. Tom offers independent alternative analysis on the markets, geopolitics, politics, and the economy, and it is second to none. tomluongo.me. Tom, thank you for joining us today on Silver Doctors.
Thank you very much, Paul. I really appreciate the invite. Appreciate it.
Now, Tom, I've been noticing that in your writing, you seem to be talking about several different chaotic events that seem to be happening all at the same time. And it's almost hard to be able to follow what's going on because there is so much. For example, I have become, not that I wanted to, but I have become an expert in what's going on in Venezuela, but I don't know so much about what's happening in Hong Kong, and that is possibly even more impacting on the world today. So I'd just like to know, with your writing and your investigations, with all these different issues blowing up around the world, what is it that you're paying most attention to right now, and why do you think that it's important for the markets and the economy?
Sure. The big issue is Europe. I've been banging this drum for 2.5 years, or actually longer. When I used to work for Newsmax, I used to write an investment letter for Newsmax, and I thought back then that Europe was always going to be the issue first. There's an order of operations that the coming financial collapse has to happen. It can't happen, it can't happen just willy-nilly. It's not going to be Japan first. I think Kyle Bass is wrong on that. I absolutely think it's going to be Europe first. If you look at the political situation in Europe, they're the most politically unstable. And currencies don't collapse because we want them to. Currencies collapse because people lose faith in the people who are running the currency. And if you look at what's happening in Europe, look at the European parliamentary elections, you look at Matteo Salvini in Italy, you look at Boris Johnson over Brexit, you look at all this stuff and you just say to yourself, come on, like Shinzo Abe is not going to lose control of the Japanese government tomorrow and all the banks are going to blow up. It's going to be Europe first. And Yanis Varoufakis, the former Greek finance minister, likes to say that the European Union, when you talk to them, they like he calls it they give people the Swedish national anthem treatment, which is that you can say all this wonderfully cogent stuff about what's wrong and what we need to do and all these arguments, and they just look at you like you just sung the Swedish national anthem, and they go about their business. And that's the way they're treating Britain over Brexit up till this point, and that's the way they're kind of treating Salvini in Italy and Orban in Hungary and Poland and the rest of it. And at some point, that facade is going to fall. That at some point, people are just going to peek behind the curtain and go, look, you're just some old dude with a microphone and a projector. You're not the all powerful Wizard of Oz. You're just a bunch of, feckless drunks from Europe. That's who you are. And when that happens, all bets are off because the European banking system is a mess. Like Deutsche Bank is on the verge of, there's no value in Deutsche Bank. They couldn't even put together two terrible German banks, Deutsche Bank and Commerzbank, and turn it into one bad bank. They couldn't even pull that one off. They've got Christine Lagarde as head of the ECB coming up, and she's completely clueless. We can point to what's happening in Argentina this morning as we're talking about this. The $56 billion bailout that she rammed down everybody's throats last year, that money's all been poofed. It's gone. It's like it's a South Park episode. And it's gone, right? So Europe is the problem. You've got Ursula von der Leyen now in charge of the European Commission. She's a pure figurehead, appointed by Macron and George Soros to continue the European project, continue Russia sanctions, continue all of this. The German economy is on the verge of complete collapse because they can no longer internally export within the EU. Because there's no more capacity to take on any more debt within the EU. So they're looking at the United States and China, and I was reading a report the other day about this, and it's just very obvious that that Germany can't have to look to the U.S. and China to maintain their exports, and the U.S. and China, well, they're slowing down as well, if not outright recession, depending on how much stock you take in in either Chinese or American economic indicators. So Europe.
And it seems like, with what's going on in Italy right now and with what's going on in the UK, it almost seems like the European Union is coming up with a couple scapegoats here for when the problems arise.
Sure.
And Deutsche Bank has kind of fallen out of the headlines just a little bit, but that does not mean that these problems have gone away.
No.
Do you see contagion as something that would happen fast?
I don't know. I mean, it's like everything else with the central banks. They're like generals. They're always fighting the last war, right? And so they think they've got everything ring fenced right now, right? They think that they've got all the mortgage-backed securities ring fenced off from Lehman Brothers 10 years ago. They think they've got banking rules in place with Basel III and the rest of it that will help get them through, whatever the crisis is. They keep running these fraudulent stress tests to say, oh no, everything's fine, because that's what they have to do. Because banking, in a fractional reserve system, banking is a confidence game. Banking is always a confidence game, but especially when it's a fractional reserve system. And so, I don't know. I mean, they're going to pull Deutsche Bank out of the headlines because they need to, because they can't. It's these things come in waves, right? Everything is about the way they manage the headlines, the way they manage the Overton window, and the rest of it. It's simply that this week it's going to be Deutsche Bank. Then they tamp that down. They move on to something else. They spin up another crisis on the other side of the world, maybe Hong Kong or Venezuela, or Trump says something stupid, or Tucker Carlson says something stupid, and all of a sudden we shift the Overton window to something else for 2 or 3 days, and then they can get Deutsche Bank out of the headlines. And so, as you said, it doesn't mean that those problems are gone. It just means that they're not in the headlines right now. But the markets are sniffing all this stuff out. We can see this everywhere. We can see it in the yield curve of the United States. We can see it in the fact that the entire German yield curve is now trading below negative 0.13%. Right? We can see it everywhere. And I was just reading an article by Jeff Snyder this morning. I don't know if you saw this on Zero Hedge about, look, guys, it's just the yield curve, stupid. I mean, it really is just that simple. If you want to look at where the problems are, dollar liquidity is terrible around the world. It's not just the Federal Reserve's fault for raising interest rates and doing QT, as Trump would like us to believe. It's not about that at all. It's about the fact that the world's at debt saturation. And there's just nowhere to stuff the money anymore. I've been making this argument about the oil markets, that they've been in such oversupply for a year and a half now, that they continue to keep the price of oil reasonably propped up by stuffing out on oil tankers and just leaving them in port, and then they just change and they just play around with the supply numbers and the draw numbers by moving the stuff onshore into a container and then moving it offshore into a tanker. They do a lot of that stuff, and that's been going on for years. And the banks are doing the same thing. They shuffle reserves around to make everything look like it's like everything's solvent, but it really isn't. Not when you've got short ends of the Eurobond. The Eurobond yield curves have all been higher than, say, the 6-9 and 1 month. We've had a kind of cup and handle shape to the yield curves for Germany, all the safe, even Germany and even the U.S. and the rest of it. At this point, it's crazy. And once the next catalyst happens, Katie bar the door. And I really think that we're at that moment. Gold is beginning to sniff this out. Silver's finally starting to catch up a little bit. The oil markets, I mean, just the non-confirmation of the gold bull market tells you, with the oil, tells you what's going on. We've got a deflationary environment in which dollar liquidity is tight. There's oil's in oversupply. The global economy is in a recession, if not in a recession now. Pick your definition. It's retarding. It's going into retrograde. And gold is peaking in every freaking currency. So this isn't hard to figure out. It's just keep it simple in the 5 or 6 very important categories, 5 or 6 very important markets, which is what I do. And everything kind of makes perfect sense. And as long as you keep looking at things from a capital flow and dollar liquidity perspective, as long as you keep that in your head, the markets actually make a lot of sense. So, to me.
And now, one of the things that we're seeing with gold is, interestingly, is gold is getting that bid, and the dollar hasn't even really started falling yet. The dollar's basically been on the DXY has been in the range, call it 95 to 98 for the better part of a year. Mm-hmm. Speaking of gold, just to talk a little bit more about this fundamental backdrop, John Williams recently said that gold is, in fact, an inflation hedge. David Morgan has been talking about gold has the potential for capital appreciation. Yesterday, Mark Faber just told me that he likes gold because it has no counterparty risk. We are definitely seeing a move into gold here. Why do you like gold? And what do you think that the main number one reason for owning gold would be? And we seeing this move into gold right now, Tom?
Sure. Of the three people you mentioned, Mark Faber is the closest to being correct, and I've always enjoyed his analysis more than others. I don't mean to throw shade on anybody. I just happen to think that Faber's got the uh, right, right take on this, which is that gold has no counterparty risk. This is a safe haven trade. We have entered the mother of all safe haven trades, and now I'm going to say something that just about nobody else other than maybe Martin Armstrong is saying, which is the following. Gold is going to rise right next to the dollar. Gold is part of the safe haven assets. We are a core economy. There's a huge bid for the dollar. There's a massive synthetic short position against the dollar. But that does not mean that people aren't going to be moving into gold as well at the same time because people are scared. So when you have a safe haven trade happening where people need dollars to service debt, a massive amount of debt, and you have people worried that Europe is going to collapse, Japan is going to collapse, yada, yada, yada. Gold is going to rise simply because, it needs to. And it's going to rise in all currencies. The dollars and the world can't afford a rising dollar at all, which is why it's been stuffed below the 98.5 line on the DXY, as you mentioned. They've been stuffing it in a coordinated fashion through central bank jawboning for a better part of a year now. That's the thing I keep watching carefully, like waiting for that monthly breakout above or the quarterly breakout above 98.5 to signal the next phase of the dollar bull is going to happen. It's going to happen right next to U.S. equities, and we're already seeing the massive move into U.S. treasuries. Capital is flooding into the United States. On this point, Trump isn't wrong. What he's wrong about is why. And it's a safe haven trade. It's why Bitcoin's at $11,000. Okay? Bitcoin's become a safe haven asset alongside gold, and it'll continue to accumulate safe haven like properties because it's got more mobility than gold in today's markets, right? People in China who want to get their money out of China you can't get it out with physical gold. They can't do so. They can't get it out with registered forms of digital gold either. Why? Because it's all tracked. But they can use Bitcoin to do it. They can use Zcash or Monero or whatever, pick a cryptocurrency. So, the gold bugs have to get over this. Crypto's for real from that perspective. This is why Peter Schiff is completely off his rocker. Completely off his rocker. This is a safe haven trade. This is a sovereign debt crisis and a safe haven trade that's going to, for a very short period of time, 6 months, a year and a half, 2 years maximum, going to be where the safe haven trade is no longer bonds, gold, and dollars. It's going to be gold, bonds, equities, and actually bonds are going to fall in out of the safe haven trade, and bonds and equities are going to change position because debt is going to become the problem. People are not going to trust sovereign debt. Go back to what I just said about Europe. You think people are going to have faith in Italian yields at Italian bonds trading at a negative yield spread to American debt? And the 30 years already, and the US 30 years already trading near an all-time high. And yet Italian debt trades at what, minus 0.5 or minus, no, actually the Italian 30 years falling above the American 30 year. But for all maturities below 10 years, the Italian yield curve is negative to the American. Does that make any sense to anybody?
No. Especially when they're talking about dissolving the parliamentary government again and calling new elections.
Well, and to that point, right? What is it telling you? That's actually the most bullish thing I've heard about Italy yet. I'm bullish on that. I'm bullish on Salvini tearing down the government, getting control of it, and this gets into some really nitty gritty Italian politics, which I've covered in detail as well. But Salvini's got to get Italy out of the euro if Italy is going to survive in its current form. It's just that simple. Everybody knows he has to do that. Everybody knows that he wants to do it. What he's trying to do is get the Italian people to tell him it's okay for him to do it. And he has to politically play the game of continually making Brussels into the bad guy in order for him to get to that point. And he's been playing that card masterfully. And I think that the moment that he's pushing on them right now with these the call for snap elections is taking advantage of the fact that the European Parliament's not really in session, that they're waiting on, that the European Commission hasn't really sat, the European Commission hasn't sat yet, that you've got Brexit overhang, you've got all this stuff with what are they going to do about Brexit, and he's just like, Ugh. He's just like sticking a knife between the ribs and go, oh, by the way, does that feel good? Ah, yeah, that was your spleen. And I love it. I love what he's doing. I think Matteo Salvini is everything I wish Trump was, to be honest with you. Unfortunately, he's not.
Mm-hmm. So. And, it makes me think back to 2015 when the ECB played hardball with Greece. And it almost seems like that the Italians could have learned some lessons with that and put themselves, I don't want to call it a negotiating position, but they could just put themselves in a better position overall to deal with the ECB. And on top of that, it almost seems like now is an ideal time for that with Christine Lagarde leading, and then just the chaos of, under new management in and of itself. So, those are just some initial thoughts.
The ECB is trapped. They're truly trapped, right? They're trapped at the negative bound. We've got Larry Summers is coming out again saying we need to go even further negative. When Larry Summers shows up, that that's what they're prepping us for the next phase of whatever it is they're going to do. The problem is, where do they go from here? Right. I was talking to one of my patrons this morning, and he made the brilliant point of saying, look, no one believes that the SDR, the IMF SDR, can actually function as a world global reserve currency, though I think they're going to try. I think I agree with Jim Rickards' analysis that's been in the wind for about the last 10 years, saying that the plan is the SDRs, to bail out the central banks with the central bank of the central banks, the IMF. But I think that's a metastable solution in the 2 to 3 year range. Remember, think about the way I look at this is in a very broad sense is the way the London gold pool fell in 1968 and we went through Bretton Woods failed then there were 2 or 3 stopgap measures until Nixon finally closed the gold window in August of 71. And Murray Rothbard covered this in What Has Government Done to Our Money, and saying we had 4 distinct monetary systems over a 3-year period. We went from Bretton Woods to 2 interims to then the floating exchange rate system we have now. And I think we're going to go through a similar thing, and over the course of the next 5 years or so. And we have to just watch how they play this out. But they're going to resist losing control over the system as best they can. And what my patron was saying to me this morning, which is really, really strong, saying that if the SDR doesn't work, then start watching for a global elite-backed cryptocurrency to be the thing that, and the IMF is already starting to make noise about this, that there's something about, they're already talking about how cryptocurrencies are legitimate in some ways, and the governments and the central banks want to get into cryptocurrencies. They just don't, but they want to have control over them, and they want them to look a lot like either Ripple or Libra or all these other non-crypto coins that aren't really cryptocurrencies. They're just another crappy version of the dollar, to be on the digital dollar, to be honest with you.
Now, if they do bring on a cryptocurrency on that type of level, what does that say for the cryptos such as Bitcoin that are around now? Because, they say the government doesn't like competition.
Yeah, right? The government hates competition, right? Don't steal. The government hates competition, right? Facebook launched Libra with the idea and the backing of the entire community, the entire payment layer, and all the major banks and everything else, and Wall Street was behind it. Well, it's just Wall Street owns Facebook. Let's not kid ourselves, because it's just a giant data vacuum. It's not really posing as a social network, right? That's not to say that they have that they're going to win, just because they're going to go into competition. The argument is always, effectively, Paul, what you're asking is, should we fight the Fed or not? And in fact, it's the same argument as don't fight the Fed, right? Because the central banks will come in and they'll do what they're going to do, and then they're going to impose order on everything. Not if we tell them all to go scratch. I mean, how much confidence is anybody going to have in these people in 5 years? Because when we look at them and go, you guys are the ones that screwed everything up in the first place. Why are we expecting you to be able to solve it for us then? When the forces of decentralization are obviously moving away from that. There's, gold is leaking into the crypto space, and rightly so. So there are plenty of gold-backed cryptos and whatnot. I think all that stuff is really cool. I don't know which ones will succeed and which ones will fail. I don't really care. I just know that it's cool that they're out there and that people are searching for solutions to problems. It's all I care about. And Bitcoin is one of them. There's 100 other different coins out there that are that way. Gold is one of those solutions as well. To a lesser extent, I think during the cycle, silver will be as well. But what's important is that when you have a generational event like we're going through now, this will be a generational event that will be talked about in the same terms as the Great Depression. Okay. And when you go through something like this, call it a fourth turning, call it whatever you want to call it, generational sovereign debt crisis, whatever you want to call it. When you go through something like this, the rules that we all lived under won't apply when we're done, and that will come with a generational change in power. So the baby boomers in the U.S. will be gone. All the post-war generational leaders in Europe will be gone. They'll all be they're all dying off now. They're all they're at the end of their rope now. I mean, Joe Biden can't put two sentences together and make any sense, right? Angela Merkel can't stand up in public for more than 5 minutes without uncontrollably shaking because her muscles finally just rebelled against her because she's such a freaking control freak. There's all this stuff happening, and when you watch all this, you just say to yourself, there's going to be a different ethos on the other side of this as Gen X in the United States takes over, as the millennials start to move into positions of power and whatnot, and they start to change the way that generational shift that Strauss and Howe talked about is very powerful, and it's going to change the way we look at things, and there's just going to be a different ethos. And so, I don't think the world is going to look anything like it currently does in 10 years. And, and for people who are worried about this stuff, obviously gold is going to do very well because it's still it's still one of the few assets out there that has no counterparty risk and is easy to understand. I go to a coin shop, I buy some gold, I stick it in my closet, and I hope I don't get robbed. This is simple. This is easy. And it's a pure hedge against government incompetence. On this point, I agree completely with Martin Armstrong. This is not an inflation hedge. I don't buy that argument. Sometimes gold is, in the long run, yes. Over the course of a lifetime, absolutely. But in the course of over any 3 to 5 year period, no. There's no correlation between gold and inflation or deflation. What there is a correlation between gold and confidence in the government that issues the currency at which it's trading against. Remember, gold and silver are the only two commodities that trade in the Forex markets as a Forex pair against all other currencies.
Now, speaking of silver, I look at silver as kind of the oddball out in a sense that I truly believe it's the one that the central banks are more afraid of than anything else, only because it is so accessible as I call it the power of the people. And, you're talking about a lot of important fundamental factors, but you can also talk about technical factors as well. So, putting the fundamentals aside for a moment and even putting any possible market manipulation or price suppression, I don't know where you stand on those issues, but I'm looking at silver and I'm looking at a golden cross on the daily chart. I'm looking at silver and I'm thinking that silver has not even begun to price in gold's recent move above 1,500, nor last week's plunge in yield on the 10-year. When you're looking at the silver market right now, what are some of the technical factors that you're looking at? Is your outlook over the next month bullish for silver? Do you think we're going to just spend some time lingering around 17? What is your outlook for silver, Tom?
All right. So I published an article the other day, and in that article on my blog, Zero Hedge republished it and stripped my charts out and put their charts in. I put the monthly chart of silver in with all the major highs of the last 3 years along the big downtrend line. Now, I'm a huge fan of downtrends. I don't use stuff like RSI or Bollinger Bands or any of that stuff. I am a pure open, high, low, close, and quantitative analysis of what's going to happen. And I just look at things through time. So I take a daily chart, I build it, I look at it the same way as I look at a weekly chart, as I look at it as a monthly chart. And all I really care about are what are the percentage probabilities of breaking the previous high or the previous low from month to month to month. So it's kind of very basic kind of quantitative trading of the from the Victor Niederhoffer school, right? This is the way I was trained by a broker over in Vietnam that I worked with for a few years, and it really does help to strip out all the other stuff because I'm way too good at pattern recognition. So and I've tried trading from all these perspectives, like 50, from all these kind of basic technical signals. To me, technical signals are very simple. You break a previous high, you look and then you look to see where you're going to go next. Silver had a recent high in February at 1733. We hit 1729 last week. I think we hit a little higher than that this morning before the news. We're doing this on Tuesday, the 13th. And, silver's now trading back below 17 because of the news that, Trump has exempted some stuff for the Christmas holiday season so people can still buy iPads. Smart. That's what he did, right? because he wants to make sure that GDP in the fourth quarter looks good. So putting tariffs on every computer component and everything that people buy at Christmas time for each other. Got news for you, not good for GDP. So that was a pure domestic play on his part, which is fine. I don't care. For once, I just tweeted out, I think 5 minutes ago, this is there's finally a brain in that head. Okay, great. But silver to me, it's two things. I like silver. I own a lot of silver. I recommend certain silver companies that I like. I like unlevered silver companies. There's only a couple of them on the market. I only like silver from that perspective. Any mining company that has that is a primary silver producer that has any debt on their balance sheet, you shouldn't buy. I just flat out. And the reason for that is because silver is becoming every day more of an industrial and commodity metal. Every day it's beginning to look more and more and more like its industrial uses are outstripping its monetary value. And I think that, when we look at what's happening with the silver to gold ratio, has hit like immense highs recently. And you're right, it hasn't priced in gold's move. But at the same time, don't expect the silver to gold ratio to ever hit 13 again, like it has in previous bull markets. I think 40 would be an amazing move at the end of this bull market over the course of the next 3 to 5 years in gold. I think silver's undervalued relative to gold because when gold gets too expensive, people turn around and they look, oh, look, silver's cheap. And they still see silver as an opportunity at this point. The same people who were interested in buying gold as a hedge against government insanity are looking at silver in the same way. I do believe that the market is manipulated and everything else, but at the same time, I also don't believe that markets can be manipulated against their primary trend. Okay, so if silver's in a bear market, all they're doing is extending it and making it worse and grinding out any arbitrage opportunities and just grinding you psychologically into the dirt, right? That's what they want to do, but that's what bear markets do. In the same way that bull markets want to puff you up and make you feel like you're the smartest investor in the world. So to me, I think this next iteration, and it's purely because silver is such a useful metal industrially, I think that by the time this silver will have lost all of its monetary character and it will trade just like palladium and platinum and oil and everything else. But for now, it's still got monetary character. It's still that kind of still got that dual purpose thing going. But I wouldn't look at it. But I wouldn't put too much faith that silver is going to have the kind of immense move that it had in the last run up. So, I mean, to say that, I say that, and I'm like, if we're looking at gold at $7,000 to $10,000 on the upper end of this, silver at 120 or 150 is not untoward, right? It'd be a 12, just think in terms like a 12x move over, like we did in the last bull market, right? We went from $4 or $3.50 to 50, right? So 12 to 15 times, right? So,
now, we've talked a little bit about gold, a little bit about silver, and you've also talked a little bit about the dollar. I just want to hit on the dollar one more time,
sure.
Because one thing that's been bugging me a lot lately is it seems that President Trump is doing a lot of flip-flopping, whether he's a strong dollar guy or a weak dollar guy.
Yeah.
And to me, the impression that I get is that he wants to devalue the dollar. But, I'm hearing you as a dollar bull. So
only in the short term, not in the long term. Right?
Okay. Now, So what do you think about all these mixed signals that we're getting with President Trump pertaining to the dollar? Because they're coming within the same month. That he was a strong dollar guy on July 3rd, and then he was a weak dollar guy last week.
Right.
What do you make of that, Tom?
Ultimately, I had Trump pegged from the moment he was candidate Trump back in 2015, or the late 2015, early 2016, when I listened to him talk. Being a hardcore libertarian, I wasn't going to vote. I wasn't interested in voting. I wound up voting for Trump. I don't really have buyer's remorse because, what's the worst that can happen? Well, I was at least entertained. I don't generally vote because I don't like to encourage them. But that being said, I had Trump pegged as a classic 17th century mercantilist. Then I warned about the day he was elected. I talked about it with people. I was on Periscope. I was on, I was doing this. I was writing articles about this stuff back then when no one was reading my work. And I had him pegged then. He is that. He's a mercantilist. He wants high protection tariffs and a weak currency to boost exports because he thinks, and he wants to, and at the same, now I will give him some credit on this. He also does want to lower the cost of the internal cost of capital within the United States. Cut the corporate tax rate, give incentives to pension funds to get themselves properly funded after 10 years of NERP, of ZERP and NERP, all of that stuff. I agree with. I don't agree with the protection tariffs. I don't agree with I don't agree with the necessarily the weaker currency. He can't stop the stronger dollar because of the conditions that the Fed has taken up over the last 10 years of pushing all of these dollars into the market in order to prop up asset prices. Those asset prices are going to deflate. When the asset prices are deflate around the world, they're going to move to safe haven assets, and the United States is the safe haven. So on the one hand, he loves all this money coming in, and we're not paying the tariffs. China's paying the tariffs and all this stuff. It's all nonsense. Like, you invited this. You said, I want to lower corporate tax rates. I want to invite capital into the United States, but then at the same time, you want a weaker dollar. You can't have those two things. It's like, dude, it's like, I want my cake and I want to eat it too. Going to be inflammatory. Typical baby boomer. But typical baby boomer who was born with 3 silver spoons in his mouth, like Trump. Just a certain level of entitlement that permeates his thinking that is just not, it just doesn't comport with reality. And so that's the problem. And that's part of why Trump is, whether he understands it or not, he is in the macro sense, the big catalyst for this change. Between the powers that be losing their minds trying to get rid of him, to get him out of power so that they can continue on frog marching us towards, global communist blah, where they're in charge and we're not. And we're just tax serfs to them. And his own misguided views on trade and the economy. This is what we've got, and everybody's trying to react to all this. And every day he creates more and more insecurity. And every day that he changes his mind and he changes policy is another day that everybody goes, okay, I don't know what to do. I'm just buying treasuries. I don't know what to do. I'm just stockpiling dollars. I mean, think of, if you're a businessman, if you're an entrepreneur and you're thinking about what you're going to do in the world, are you going to start a business and want to do trade with the United States? Are you going to want to accept dollars? No. So in the short term, yes, we have to have this massive dollar upwave. But in the long run, Trump is actually the guy who's going to kill the dollar. So we're all going to be right about the dollar going by the way of the dodo, not the way of the dodo, but it's going to become a minor currency. It's just has to happen in a specific order. And Europe has to fail first, then Japan. Emerging markets are already in effect failing. And then eventually, once the dollar rises too high, then that will cause a collapse of the American political system, because we won't be able to service our debts. Housing market will collapse. Yada, yada, yada. Can this economy handle the 10-year at 6%? No. So imagine that. So imagine what the budget looks like after 4 years of Trump running $1.2 trillion deficits every year. And then we raise interest, and then interest rates rise by 0.5 point, and all of a sudden the percentage of the budget that goes to paying debt goes from 15% to 30%. That's what we're dealing with by the time he's done. I don't know what the actual numbers are, but just that dynamic is what's in play. Plug the real numbers in, and you have a trend, and that's the worry. And that's it.
Now, President Trump thinks that he's a shoo-in for re-election, and it seems the supporters are very adamant about the fact that he will get re-elected. And the Democratic field is just out of control. And we've got to deal with this for 15 months now. What are your thoughts on the 2020 election? And how do you think the economy would play out as we move into November 2020?
The Democrats are hapless. The DMC hasn't learned anything. They're still going to try and run Joe Biden. They didn't learn anything in 2016, that you can't shove a candidate that nobody wants down their throats. If we don't get Joe Biden, then they're positioning for Pocahontas and the Gay Mayor. That would be Pete Buttigieg and Elizabeth Warren, who Trump will destroy. Their only shot with the current crop of candidates is Tulsi Gabbard, because Tulsi Gabbard Trump couldn't, and her record is too strong, and she's too strong a person, and she's too, regardless of her economic policy, which is, we're not talking about that, purely on the buyer's remorse on Trump's foreign policy that he has not followed through on, which is the only reason I voted for him. and which is the only reason that a lot of libertarians voted for Trump and didn't vote for, Gary Where's Aleppo Johnson, that he has to get that under control. The economy between now and then, a lot can happen in the next 15 months. This is a very, very interesting time, and I don't want to project too far here, but if Europe starts to collapse, and I don't know how much contagion there's going to be to the U.S. banks. I can't give you those answers. I'm not that guy, right? I wish I was, but I'm not that guy. The likelihood here is that Trump will try and stop the Fed from bailing out the world, or he'll tell them, go ahead and take interest rates to zero, because he's got to bail out the frackers. He's got to bail out everybody else to try and keep the oil boom bust. Keep the oil boom from busting, which is I think he's actually more worried about that than anything else, because that's where all the GDP growth has come from, along with all the negative free cash flow that they're generating, right? So I don't know. 2020 is going to be interesting. The odds at this point, given everything that I'm seeing, I think Trump is a shoo-in for re-election, barring any massive outside curveball. Them trying to pin Jeffrey Epstein, him like covering up Jeffrey Epstein testimony on him. I don't think that'll stick. I don't think anything has stuck so far. All he has to do is begin the process of pulling out of Afghanistan, winding down in Syria, he's Pompeo is already signaling that time is running out on dealing with Iran, with Iran and all of this stuff. So it sounds to me like, at some point Trump is going to pull back on all of this stuff and try and placate his base. Not that I think that he's actually in charge of this process or anything, but I think he'll try to wheedle himself out of this, and he'll move to 2020. I think he'll get through it. It'll be, because the thing is if he does it right, it'll be a Mondale-like loss for the Democrats. That's not to say that they'll lose 540 votes. They're going to win California. They're going to win most of the blue wall, but Trump will win 370, 380 electoral votes, which at this point in time is really close to a Mondale-like loss for them. So that's what I think.
And wrapping it up here, Tom, your newsletter is called Gold, Goats, and Guns. And, I think that there are things that are important other than gold and silver.
Sure.
I think that skills are important. I personally have been working on my computer repair skills, although I'm more adept at breaking computers further than actually repairing them at this point. Times are good, and you think that in the short term, you're bullish on the dollar, so times could get even better. Are there any kind of preps outside of gold and silver you're looking at, or like what would you be focused on now that times are good and that the dollar is relatively stable and possibly strengthening here?
My with the dollar strengthening, if you have any debt, you need to get rid of it. I mean, from a skills perspective, I don't know. I mean, I've always advocate for people to diversify their income stream as much as possible. So I don't just have my Patreon. I have other paid gigs that I have in order to, so if Patreon shuts me down tomorrow, at least I have some income, because I've been in that position before where I had a great gig and then it went away and then I was down to nothing. And I've done that 2 or 3 times in my life and I don't like it. I've raised goats. I've raised dairy goats. I've done all that. I've done the prepper thing. It's fine. It's cool. I still have a lot of it in place. I still have those skills. I don't want to re-up them, but at this point in time, they're just a distraction from what I'm trying to get done. So I've cut back on that stuff. But, like everything else, it's time now to figure out, can you monetize your hobby? I've told people this before. I've in my newsletter every month, I do an editorial. I do 3 or 4, politics and portfolio related articles. And then there's always just a general editorial where I discuss whatever the hell I feel like talking about. And 5 or 6 months ago, I reminded people that, look, it's at times, if you have hobbies that you really like and that you're good at, if you can figure out a way to monetize your hobby, this is what I've done. I've monetized my hobby. This used to be my hobby. I used to spend all my free time just sitting around on sites like Silver Doctors and others, just doing the thing and talking about it and be part of it. And it was my hobby, getting better at this stuff. If you can figure out a way to monetize your hobbies and figure out a way to monetize the things that you love, then it gives you the opportunity to, if something happens and you need to make a switch, or you have to make a switch, or you're forced to make a switch, that you can do so. It's important to keep your options open. Cash gives you options. So getting out of debt raises your free cash flow, raises your disposable monthly income, and and that's the way the portfolio is based for the newsletter. It's the way it's a general thesis about how to run your life, which is always give yourself as many options as possible, and avoid all the common mistakes that we've all made in our lives. Right? I'm not saying that I've ever run my life exactly the way I describe it. I just do my very best. So I now own my own home. Right? I own my home because I built it. Right? I built my home because I couldn't afford the mortgage to have somebody else build it for me. So I had to build it. All right. So I have the skills to, repair my home if I need to, tear out a wall, do this, do that. Those skills are there. I'm 51 years old anymore. I'm not sure I want to do that shit anymore, but there it is. So, but at least the skills are there. I can teach them. I can pass them on to my children. I can pass them on to my friends and my family and everything else. So that's the kind of thing you want to be looking at. And that's where you start, is monetizing your hobby in my mind, and get out of debt. Those are the two big things that people can do.
And we appreciate you coming on Silver Doctors for the first time. If you could just talk about 30 seconds about your website and what all
Sure.
you offer, because some of our viewers might not know exactly what you offer to the public.
Sure. So you can find me over at tomluongo.me. That's my blog. And I also write a regular gig for moneyandmarkets.com, as well as Strategic Culture Foundation. And I still do some work for Newsmax on the side. But I have a Patreon. The Patreon's very simple. I got 3 tiers. The tip jar, $1 a month. $4 a month, I do twice weekly private market reports, video podcasts. I do technical analysis of like gold, silver, Bitcoin, oil, whatever I think is interesting, along with some political commentary. Those are for the $4 tier. That I also keep a private Slack server for the community to share ideas and discuss. So I'm available 24 hours a day via that as well. And then there's the monthly newsletter, which is an 8 to 9 page kind of classic retail level investor newsletter. I focus on gold, cryptos, asset preservation, and income stream. So I have and we do it that way. So that's what I've got.
That is a very solid footing and very knowledgeable today. You threw more facts and information at me than I think I could digest. So I am personally going to have to watch this at least 2 times. I know that. Tom Luongo, I'd like to thank you for joining us today on Silver Doctors.
I appreciate the invite.